All right, good evening, ladies and gentlemen. Welcome to the program. Today we'll be discussing best ways to utilize your roof as a natural garden, as well as how to make really good quiche. I don't know what I'm talking about. What up, Mike? Good morning, my friend. Sorry about all my babble, but what else am I supposed to do? Not a whole lot to talk about. Shorting seems to be the name of the game, though, to be quite frank with you, and we'll maybe get to some of that. Market has just been stagnant, and babe, I just started my show. Ethan's going for it. Wow. Son's learning piano, sorry, and he's going crazy in the background. You probably can't hear it. Playing the entertainer like at good speed. It's funny. All right. Sorry, my wife walked in here. Everything's all over the place. There we go. Gets that white left off the screen. Okay. Now we'll do normals. Okay. All right. Oh, looks like public today. Didn't realize that, but okay, let's go with it. Got some friend, Mike. Hey, what's up, Ian? How you doing, bud? I didn't change my setting from last Saturday, Mike. That's cool, though. All right, so let's get to it. Go through the newsletter as normal, and we'll see what's going on with the markets. But not a whole lot. BTC's been flattening out. Living the dream. Very nice, my friend. Very nice. BTC's been flattening out here. We had this weird garbage cup and handle. What up, Paul? How you doing, bud? Coming back down again, flattening out. Popped up a little bit yesterday. Volume's been retreating to just really, I'm not sure about normal levels. I guess pretty normal levels. Average volume still pretty high daily time frame, but we're living underneath our 17,695, which was the prior low, and that just implies this downtrend still intact. FTX is still collapsed. That hasn't changed last time I checked. And apparently SBF is a huge douchebag. Hey, what's up, Rom? So that's changed. I guess he's putting on an act this whole time, or he's just trying to play hard ass right now. I'm not sure which, but if you see him, just punch him in the face for me. I don't like people that put on fronts like that. Anyway, yeah, so we're sideways right in the middle of this triangle. We'll see what it does. We keep moving this line up, getting more in tune with this bottom line. So maybe we'll pop up and do a pretty symmetrical thing. And before we finally end up dropping at some point, because it looks like the drop is still on the table. We didn't get it on Monday. It was looking very akin to the 6K drop we discussed last Saturday, but that didn't happen. We got popped up a little bit here. Not really saved, but just popped up a little bit. Still in the bearish formation, so it's still reading as just a matter of time before we do take a drop to the downside. And until then, it's just minor chop. This is small balls. Really not a lot of trades to be had unless you want to be very active and take profits very, very quickly. A lot of the FTX things are still provide Solana, SRM look pretty decent. There's some other smaller coins that are flipping around, but just very randomly. Very, very random things. There doesn't seem to be any rhyme or reason to it. So you're usually catching a move late. And it's hard to have confidence in a lot of trades like that. If you guys have confident trades, shout them out. But I just haven't seen too many around. No market theme is prevalent at the moment. I mean, across all industries, across stocks, across cryptos, currencies seem to have finally topped out for the moment. We'll see for how long. We've talked for a long time about another shoe dropping. We've had some things drop, but nothing really to the point of breaking the market yet. So the Federal Reserve just raised 0.5 instead of 0.75. So while it's still raising rates, it's reducing. So think about it. If you're a large money manager, you don't get too bearish on the market. You're just fine where you are. Then you're ready to deploy capital if and when things get good again and you see the signals that you're looking for, whatever those are. What a pleasant YouTube notification. Rough odds of going up versus going down. Well, I think going down is much higher likelihood than going up. This is a very prototypical bear flag right here. You just throw this in a textbook for the most part. Now, if it comes up and hits this trend line, this is almost the same angle as this bottom trend line. Actually, I have it drawn wrong, which is basically established at this point. What's up, Kleiber? So we should, but it's like I said, it's a prototypical bear flag. Usually, and if you look at it, we are underneath the prior low on BTC. That's what the 17,695 is. When you bear flag underneath a level like this, it's very good likelihood that we continue to the downside. So the question is when and how far. If you take a measured move out of this, which we can do from our 21.4 down to this recent low, and you can do to the breakdown point of the triangle here down to 12,000. So yet another thing pointing us towards 12,000. We got a couple things pointing us in the 12,000, 10,000 area. One thing pointing us in the 7,000 area. I think the bottom on this one is going to be a lot trickier than the ones past. And I think I said last week, you're going to have to look at the action in the moment in order to actually try to find a really good bottom, or just blindly buy as we go. If we go under 2,000 and then just hold forever, is how that's going to go. If you buy it at such a low price, and no one knows where it's going to go. The other thing too is what are the traditional markets doing? Have they gone sideways? Are they not responding to a crypto failure, or not even a failure, but a further crypto leg down? Is this going to go with traditional markets if they take another leg down? Because we'll look at stocks later, as we usually do, and we will see that those aren't looking super hot either. All right, so let's go ahead and move on to Ethereum. And Ethereum, living underneath this declining trend line, probably will pop up at some point, maybe. This isn't as bearish as BTC, I don't think, but it's also not near. It's not good either. There's nothing really bullish. This isn't a bullish chart pattern. So, Loopy, you found a coin bucking the trend. Apparently, the fastest coin created with 1 second blocks. Also for the right time in your show. Okay. Yeah, so we do we'll go through the top 20 USD. Then we'll go through, I don't have any USD pairs. Then we'll do BTC pairs. There's only 2 that I have. And then after that, we'll talk about stocks and the currencies fairly quickly. So, yeah, if you want to do it after the wrap-up for the top 20 coins, anytime after that would be great. We can do it now either. We can do it now too. It doesn't really matter. But, yeah, so Ethereum here, not as much of a bear flag as Bitcoin is. Ethereum led this last leg up, and it shows with where most of the action is holding up a little bit. Monkeytron's alive. There you go, bud. How you doing, bud? It's been a long time. Did you enjoy your sabbatical to the Sahara Desert where you've been? Son of a bitch. Good to see you again, Monkeytron. So Ethereum, I mean, it may try to pop up, but none of this is extra. This is not what you want to see, in a textbook. So this is all bullish. You go up and down and lower highs and lower lows and lower highs and lower lows. It's not constructive action. So we will see if it does try to pop up. Otherwise, if it breaks down, it could be rather dramatic. It broke down here in pretty dramatic fashion. We could see another further breakdown if the selling intensifies. Look for volume increasing on a lot of these as we go forward, or I should say lower as we go lower. KAS is the token. Okay, let's take a look at this this KAS token. What do we got with KAS? All right. Oh, yeah, definitely bucking a trend. That is actually a bullish looking token. Very nice. Thank you for that. Let's take a look at it. Let's see what it does. All right, Ian, have a good day, bud. Take it easy. Yeah, accidentally went live today. That's okay. All's good. What do we got? Caspa. I don't see Caspa even on here. There it is. Rank 232. Mineable proof of work store of value. Store of value, huh? That's a little bit ominous. Definitely been in a nice uptrend. Let's go check it out. Could be interesting. Fastest open source decentralized fully scalable layer 1 in the world. It's the first block DAG, a digital ledger enabling parallel blocks and instant transaction confirmation, built on a robust proof-of-work engine with rapid single-second block intervals built by industry pioneers, led by the people. Led by the people. 2021. 1 second block time is pretty cool. 93 million, that must be an old stat. This has to be more than 93 million right now. It says 93, but if you look at fully diluted, and when we were looking, during the last larger bull market phase, we were focusing on circulating supply and fully diluted market cap versus market cap. Still pretty low, 183. 232 isn't too bad. I'm not sure if they're playing a circulating supply game. A lot of them have gotten really good at manipulating that circulating supply. Efficient proof of work security, block DAG. Block DAG, it sounds good. Caspa wallets. Caspa accepted everywhere, listed on Conex. Okay, so interesting. So fast layer 1. I guess transactions per second would also be good. Does it have transactions per second? Doesn't really say. One block per second, aiming for 32 seconds. A generalization of Nakamoto consensus laws for a secure operation, maintaining very high block rates. Currently 1 block per second, aiming for 32 per second. Nice. Research paper for some initial benchmarks. So this is interesting. Some kind of a mesh topology or something. I'm not going to go too deep into this thing. Got some really smart people working on blockchain. Let's just hope they don't copy each other, which historically they've all just copied each other. But main result, protocol safe increase. Yeah, they're just talking in mathematical terms. They're not talking scalability. Could be interesting. Yeah, Loopy, it's a nice one. Yeah, 1 second block's pretty good. I'm not sure what Avalanche, because Solana is having issues right now. So AVAX, block time. Solana and AVAX kind of came on and did their thing, so they're around right now. The cool thing that I like about Avalanche is the multiple blockchains. I think that's pretty cool. I like multiple blockchains. What is this? Whatever. This is not doing much. AVAX doesn't even have block times. It issues a block when there's work to do. That's interesting. So I'm not going to go too deep into this, but it looks like an interesting project. KAS, no, and the chart is, the only reason I looked at this is because of the chart. There's absolutely some nice accumulation happening here. So there's an IPO base right here. It's on MEXC. Where do you even get this thing? Looks like it's really flying under the radar. MEXC, CoinEx. Yeah, so you got to, looks like most of it's on TXBit, whatever the hell that is. So sometimes you see a token, the next question is, can you get it? That's the next question. Base market, BTC, ETH, USD. Oh, you got it on MEXC? Okay. Yeah, it's looking interesting. I mean, the chart is really nice. No KYC on MEXC. Oh, okay, that's good. Like this is a good looking chart. It's holding really nicely. This is a bull flag of some sort. Could be a pennant, could be a symmetrical triangle, depending on what you want to do. That's a very bullish formation. You're absolutely right, Loopy. Thanks for bringing this up, bud. This is a nice one. Nice declining volume signature. So you have accumulation on the way up here. You can see in my volume aggregation tool. The volume aggregation tool essentially looks at the volume and whether the candle was buying or selling, and then adds it up for the buyers and adds it up for the sellers. So you can see them discretely against each other. And this is what you'd like to see, the green, popping up dramatically. At least it's not on FTX, right? So these pluses are another signal called a pocket pivot. And a pocket pivot is a large candle volume signature. So you're getting pocket pivots as well as accumulation volume. And then you see the distribution is selling a little bit, but not a lot. And then now you're back down to kind of an even keel as we're going sideways. So that's what makes this bullish is your sellers have stepped in. They've done their thing, and they're done. And we're still holding a higher price. And what you're seeing around the rest of the market right now is the opposite of that. Is the sellers stepping in, and then the buyers doing their thing, and then the buyers are stalling, and then usually the next leg. That's why things move in the same trend in the same direction, is because of that type of a dynamic. And so this is really nice. I really like this. I think I want to add this to my USD pairs. I mean, it's not, can't do much with it, but actually I can just do it here. Power Hour USD pairs. There we go. I like it. I'd like to keep an eye on it. Maybe I'll move some money over too. Low blockchain. I'd like to look into it a little bit more, but yeah. So here's the daily volume aggregation tool. Talking about the same things, but you can see this one looks like it's a little bit worse for wear, but obviously you can tell the price is moving up tremendously. I haven't. Did you do it this morning, Mike? No, I've been super busy. I had karate yesterday. Oh, there we go. Yeah, we'll take a look at those. All right, cool. Let's do those. Let's do those right now. So yeah, thank you very much, Loopy, for Caspa. And let's take a look at these. Fancy look at a very long-term trend lines, Bitcoin and ETH with log off. What's interesting is where this is on BTC, but also ETH, which is sitting right on it. All right, let's look at Mike's charts here. And if we need to, we'll go into my charts, but should suffice. Okay, so you got log off charts with some bottoming down here. I can't see the dates. But then you have this, looks like 2020. So you got a pi method up right there. You got support. You got horizontal, what appears to be some horizontal support here on this white line. So that's the whole 6K thing. Oh, this is BTC. That's the whole 6K thing. And then, so potentially meeting its maker at about 8K, huh? December 12th. Mike, you know it has to be December 17th. This is going to go in your permanent record. It has to be December 17th. We all know this. 79.3. So Mike's hitting the bottom on the head here. Hitting the bottom on the head. What else we got here? RSI's pretty low. Yeah, that really wouldn't coincide anything with the RSI if you're looking at bottoming action like that. So here the bottoming action went super low. I think we looked at this and these were in the single digits. Both of these bottoms, if I remember right, were in the single digit RSI or getting close to 10 at least. Maybe I don't know if we'll do something like that. Both of these were just very, very bearish. And we had one event here, which was very bearish on RSI. Yeah, so that's interesting. If we get down towards 7,900, let's look at the next one. Oh, what was your comment there? Price predictions, bit of fun. Log on this one. See the other yellow trend line I've drawn, whether the trend line would have been off. Yeah, without the context a little bit of other, it's hard to see, but so there's your white horizontal line. Is this one also log off just with zoomed in a little bit? Oh, log on this one. See the other yellow trend line I have? Where the other trend line? Oh, it would have been with the log off. So you drew it where it would have been with the log off. I gotcha. So, but this is log on. Okay. 79. Yeah, there's some. Yeah, like I said earlier, we had some things in the 7,000, and then ETH with log off. It needs to hold. I don't think it will. There we go. That looks more like Ethereum. Oh yeah, that's pretty. Oh, good eye on this one, Mike. Yeah, absolutely. Oh, this is very nice. Look at that one. Very similar slopes. You have the huge bump, and you have the coming back down, and then you have it undercutting the trend line, which puts you into a winter time for sure. I want to go look at that one for a second. And then you have this one. Oh yeah, that's really nice, Mike. Mike, your chart work has gotten next level, bud. Very nice. All right, let's go full screen on this one because I see what I'm picking up what you're putting down there, and I like it. But you had log off, correct? Let me move to another Ethereum chart that I really don't care about. And so what Mike's pointing out is this. And then he's pointing out this. And I wanted to see this. Ha-ha! Aha! Very interesting. Very similar structures. Head and shoulders pattern here for sure. I think we have this one is a head and shoulders pattern. Did this already hit the target? This already hit the target, didn't it? It's just with we have log on, so it's different. Yeah, see, negative 523, that doesn't work. We have this on, yeah, there we go. So have the log on, you get this, which it hit it. So I removed it right there, bam. So I removed that line. Okay, so I'm just making sure I'm thinking correctly. All right, so there's the head and shoulder. This one's already done. This one's already been done, but yeah, brought us back to here. This in a similar fashion. You know, let's put log on for a second. I bet. Neckline. How's the neckline? I don't know what I'm thinking. And then bam! Look at that. This one hit it and stopped. And that was the low. So this is a much larger head and shoulders. I don't know if I had this one. This one I don't think I had. But if you use this as a head and shoulders pattern, bam, it hits that target. This one double bottoms over definitely a period of time, over a year. This is December 18. This is March 2020. This is like 15 months. Double bottoms. Okay. Okay. Not mad. But you take the log off, and obviously those scales are crazy. So maybe, Mike, maybe we hold this low vis-a-vis this thing. So you break the trend line here, come down to the low, just at 1,000 again. What was this one? This one was 83, so loosely 100. This one's 1,000. I mean, if you rinse and repeat, then you're looking at, you're looking at another 10x up from Ethereum if we come down and hit 1,000 again. And we're not really that far away at 1,200. I mean, to be quite frank with you, we could undercut this again. Maybe we'll come back and retest this level. Again, we're looking at non-log charts. So this is definitely interesting. I forgot to timestamp this. Damn it. I'll have to go back and look for ETH timestamp. Yeah, so definitely some possibilities on the table. And look, we all know that Ethereum is like the king of crypto. I mean, BTC withstanding, obviously, but Ethereum is this one, the stable is the one that works, is the one that doesn't really get crashed and stuff like that. Yeah, I don't know. I mean, we'll see. We're really close to it if you do take another massive leg lower. But it's the thing, Mike, and I mentioned it very, very loosely when it came to traditional markets a little bit ago. I mentioned if crypto drops and traditional markets go sideways, I mentioned that, and so maybe Ethereum, goes a little more sideways. Maybe we never get the big drop. I mean, obviously it doesn't have to happen, but I do feel like, Bitcoin's come down quite substantially. If we do go down though, because what's 85? It's 85% here. Yeah, that's the 10K. If we get down to 10K, yeah, maybe ETH does dump. I mean, we're very small percentage to the 1,000, 25%. That's to 900 even. Yeah, maybe we do dip underneath of it. Maybe we'll have a form of something like this. This is a weekly chart, so it's slightly different, but this could be a capitulative event. Obviously, it's come down dramatically at this stage off of this right shoulder, came down all the way, over the course of a month or so. Bam, hits it. Maybe we hit it again. Maybe we don't go down as far, but I'm kind of with you, Mike. I think ETH coming back is probably going to be more monster than BTC. It typically is. Just looking at the market cap, about it's easier to move something that is, wow, these are getting pretty darn close. 147 billion, then 319 billion. But they're actually not that far away. I don't really keep track of that day to day. So we're down 75% BTC, and we're down 75% on Bitcoin. Wow, we may actually get a flippening at some point. That's crazy. But they moved together. I'm not sure if it'll actually flip, but this is pretty darn close. If you look at the Bitcoin dominance rate, they're like 50% on one another. Where's the... Oh, here we go. No, where's the... There it is. That's the chart I'm looking for. You get rid of all these other ones, and obviously the flippening is an interesting concept. But we've... Oddly enough... I don't want to do that. I didn't want to do that. Oddly enough, so we had the spike here back in looks like June of 2017. I wasn't around then, but we had these tight ranges like this, and then Bitcoin dominance last time took over tremendously. Of course, ETH dominance probably dropped just because a lot of other altcoins stepped in. But it's interesting that they're kind of holding the same range, pretty close to one another, within 5 or 10 points. That's an interesting dynamic right there. ETH likely to break the trend line. BTC still has some way to go. If it remains above, BTC would be more bullish. Would have to be more bullish short term. Yeah, but percentage wise, is Ethereum. So we'll see about that. That's a very interesting chart on Ethereum, especially. There we go. Yeah, I mean, ETH coming all the way back down like this. Obviously, still a very volatile asset. And what was the mark? 179 billion? 180 billion? If you view it in terms of stock. But the other thing about Ethereum, and I think this is what's... Yeah, next cycle, absolutely. I think this is what is intriguing when they talk about market cap. They try to compare them to stocks. And I'll go to FinViz because I like FinViz. If you try to compare it to a stock, 189 billion, that's a pretty good stock. You're looking at, 40 to 50, about 43 in terms of a stock. But the other thing is that ETH is truly global. And some of these companies, while they are global, so it's interesting to put it in relation to these. And then, if Ethereum, I'm not sure what his top market cap. What was his top market cap? I don't remember. So it got over 500 billion. That's pretty impressive. So at 500 billion, you're really playing with the big boys here. With 500 billion, it puts it up with the Berkshire Hathaways, Teslas. Now this was probably worth more at the time. But you're still probably looking back down here with Nvidia, JP Morgan Chase, Taiwan Semiconductor, which Warren Buffett just put a bunch of money into. So, Green Lamp, yeah, I agree with you. It's definitely the only reason I'm going this deep into it is because it's Ethereum. I agree with you on the Dogecoin thing, 1,000,000%. But it is used. It is a metric that is used by some people to kind of just value what something is worth overall, and it does matter. Especially if you're looking at something that is institutional grade, which I believe Ethereum is very likely institutional grade. It's still super early in cryptocurrency's use case, Ethereum's use case. But yeah, I agree with you. Dogecoin is garbage in terms of market cap. All that stuff is garbage. I mean, if you look at it, it's really interesting that a lot of the big ones are now stable coins, BUSD, USDC, Tether. But yeah, so I agree with you at that point. But I pretty much only do that with Ethereum in terms of the market cap and comparing it to actual things in the real world, because crypto still isn't really truly in the real world. It kind of lives in its own little universe. But Ethereum, could be tiptoeing into it. They have issued a couple of bonds on the Ethereum platform in a trustless manner, right? So maybe that could be a big future for the next 10 years or so. But anyway, I digress. Great chart, Mike. Yeah, I really like this one. I like the fact these slopes are very similar. All the tops are very similar. Maybe the bottoms are very similar. If we're going to break this in the next coming months, you know, you have another, what is that, year and whatever until we get back at it. So maybe we go back in 2024. 2023 is the year of the sideways. 2023 and 2018 will be synonymous with one another, or 2019, I guess. It'll be interesting. All right. Great stuff, Mike. All right, let's move on. Still going down the top 20. Let's get off of the weekly time frame. Binance is a company like Ethereum. I haven't really viewed those two in relation to one another. But yeah, I guess you're right. Binance isn't really, you can't really buy Binance. BNB isn't a great proxy for it necessarily. Versus Ethereum, you can invest directly in this operation, which is pretty cool. Anyway, so yeah, Hex here, just living lower. Looks like it wants to break this 2 cent or 3 cent barrier. Got down to 2 cents. Looks like it's going to keep heading in that direction. BNB, I got to get my chart back looking right. There we go. All right, so BNB here happily living lower in this bear flag. Attempted to go higher, but not really much doing here that's very bullish. XRP, oddly enough, behaving better than a lot of other coins. Not very good, but better. So we still have this kind of symmetrical triangle situation going on, but we're at least for the moment holding up in the upper echelons of it. But again, technically it's a bear flag for XRP. If it does try to break to the upside, though, that would definitely break the trend. And if we were to extend these lines out, these would have a tremendous amount of time to go before they even really had to do anything. But that's a big bear flag. Next up is Dogecoin. Green Lamp is a huge fan of Dogecoin, and he's buying here in this flat sideways area, which is amazing trading. I'm just messing with you, Green Lamp. I mess with you because you're saying valid things. But yeah, so this has just been sideways. Obviously, a lot of the Twitter thing has. A lot of the Twitter stuff is worn away. This was all Twitter, and then it's already pretty much down. Bear flag situation as well. I got some other trend lines for potentials, but they're really not doing anything. And you can see as it breaks this trend, it's just going sideways. This is just really non-directional asset at this stage of the game. Cardano, sideways but lower. This one living underneath this most recent pattern, so this is not bullish at all. And look at the volume aggregation tool here. It tells the story. The buyers are just not interested in Cardano. Buyers are flat sideways, and so is the price. Price is pretty much flat. Obviously moving lower, but not leaps and bounds. Solana seems to be pretty clear in its direction. We do have some support here that we found at the 1250. We may bounce off it a little bit. This could, any bouncing at this point could likely be seen as a potential short entry opportunity with a rather tight stop loss. This is a more bearish formation. Obviously, Solana and FTX are, I don't want to say tightly integrated, but it's kind of part of the Solana ecosystem. I'm not sure if it's official or if it's unofficial, but it's known. Anyway, measured move from here gets us down to here, and a large head and shoulders, like what we just saw with Ethereum, gets us down to the 250 level. Where we're at now is the 1280 level. And so downside does seem like it is on the table for Solana. And, maybe that's... So we do have some things with large targets like this. Not too many. Maybe that next leg will get us there. All right, Matic. Matic's been definitely better for wear. It hasn't worn as bad as a lot of these other ones. Holding up still from these June lows. And but nothing doing currently in terms of buying. Next up is DOT. Rinse and repeat. Get garbage. And another bear flag right here. This would likely, you see right there breaking a trend line. Not in a bad fashion, but we're going in the wrong direction. There should be support here. There's not. And we've already undercut. When volume steps in is usually when these things really start to go, and just hasn't happened yet. Not sure if it will or when it will. Tron trying to buck the trend today. Tron trying to go up here a little bit. You got a bit of a cup forming. You Tron was just really wide and loose even during its bullish phase, and it's just really very hard to do anything very long term with Tron. Shiba Swap. Shiba Swap choppy lower sideways. Pretty much everything has a bear flag right now, Shiba Swap included, and it's doing a bad job of following Dogecoin, which is pretty much what it does these days. It just follows Dogecoin. AVAX lower in its bear flag. Waiting for this one to drop as well. It's like more of a horizontal here for AVAX, but will likely drop as well. The whole market is looking like it's just waiting for the next drop. Uniswap, a lot of random stuff going on here. Didn't undercut these lows very much. Still up off of the June lows. Really can't pull it together as much as Matic, but looking better than a lot of coins. Atom, just not a lot to do these days, guys. This is where patience pays off. Atom, bear flag, sitting lower. Looks like it wants to drop. Yeah, exactly. That's what I'm saying. They don't do a good job of what they do. Chainlink, stuck in this very large range. Chainlink has a lot of followers, from my understanding. I'm not part of their community, but nice sideways range here. I'd like the 9.7 to break up at some point. Maybe in a year or two. And then Litecoin, which has been one of the more bullish cryptos as of late for some weird reason. I'm not quite sure why. There's been the whole thing about wallets increasing in Litecoin going on like 2 years now. So it can't be due to that. I'm not sure what it is, but volume stepped in pretty heavy here. Came down. We're stabilized out a little bit. Not really bullish, but we're stable. So I guess that's really all you can do at this phase. Volume is starting to diminish though. These pops are getting less and less accumulation. See the volume aggregation tool, not really any difference between the buyers and the sellers now. Was pretty good over here, but just there's no follow through in this market, and I think that's really the key thing. So let's go ahead and wrap up the top 20, and I just said it. There's just no follow through in this market, up or down right now. The bias is to the downside, but the question is when and where's your entry if you're looking to short. I say if you're looking to short anything, try to find a pop. You try to place a really tight stop loss, as tight as you can get it, because here's the thing: when things start to drop like this, and you can use this as an example, we can use this as an example. It's hard to know exactly when, and exactly when is the best time to short. And there's lots of different good shorting opportunities, but it's really random as to which one works in which base. So that'd be a good study to do. If I had like 2 weeks, I had literally nothing to do with, which will not happen because I have young children. That would be an interesting study. Study rising channels and bear flags and see what's the most likely breakdown and place to short. And then you have consolidations, maybe swing failures to the upside, but this one swing failured on you 3 times. So here's your prior high. Swing fail, swing fail. Here's a bigger swing failure. And this one swing failed, the swing fails right here. So those can be good selling opportunities, rising on low volume into new highs. But it's difficult to do that because it's counter to what's happening. So it's very difficult to do that effectively. But right now we don't really have that. We're living lower. So anyway. Yeah, I agree, Loopy. Everybody is waiting for the crash. And they'll get it whenever it happens. I didn't have any USD pairs, but I do have 2 BTC pairs because there's so many damn coins in here, and there's always going to be a couple. All right, Litecoin. Woohoo! Talk about Litecoin again. Litecoin's been better for wear. I mean, it's choppy. It's a bit all over the place. There's lots of distribution, but it's still up. So I can't argue with it too much until this trend line breaks and we go into a much larger consolidation or just a further breakdown. It's still in an uptrend, but like I mentioned earlier, looks like the buyers have kind of taken a vacation. Sellers really just haven't stepped in and taken over yet, but I think it'll happen at some point. It's been a pretty good run for Litecoin, especially considering the market conditions against the dollar and against Bitcoin. So, maybe considering, looking at when taking profits on something like this, because it's not going to go up forever. Next up is Trust Wallet. Again, we've been keeping an eye on Trust Wallet. It's been in this massive uptrend. Not quite sure why. Really took off during the FTX debacle. Has been basing ever since. And it is, let me get rid of some trend lines. That's an old alert level. This is our current alert level to 14,255. So hopefully that holds into the trend line, and then we get supported and can move on further. There you go. So that's Trust Wallet right now. Not really buyable, but still holding in a good fashion. Volume aggregation tool likes it. Look at the bullish pressure really rising. Even on the 2-hour time frame, look at it. The sellers, did their thing, and we held the low of this, and so far we're still good. So Trust Wallet, one of the leaders in this market. I think Trust Wallet's market cap actually is like in the 50s. 47, yeah. Rank 47 for Trust Wallet. I guess I could have just scrolled, but yeah, Trust Wallet, Sandbox Theta. It's in some interesting company. So Trust Wallet, yeah, this one definitely surprising. I'm not sure why. Maybe just because the name's Trust is in their name. They'll be the next ones to fail, I'm sure. Okay, so that's it for crypto stuff. Those of you who want to stick around, we're going to do some stocks, and we're going to do some DXY. Let's start with the DXY, which is currencies, if you're unfamiliar. DXY is kind of the symbol for the dollar currency index across all the things. We've been tracking this one right now for quite a while. You can see all the chart work we've been doing, and it's broken trend. It's definitely broken trend. Well, this does look like inverted head and shoulders here. We don't have volume with this particular asset, so it's hard to ascertain. But if you view this as a head and shoulders pattern, which it looks pretty close to being one, you are rising to a breakdown point. This is looking like it's broken trend, at least according to these patterns at the moment. So maybe we're going to go into a stagnation up here, which is definitely better than it rising tremendously. It's not good for anything when the dollar rises too far. It is the world's reserve currency, and it needs to be affordable in a sense. So, hovering around $1, I think is good. Up 6 cents isn't too bad. I think, we could live up here if we go back a really long time. Let's go to a monthly chart. You can see we definitely undulate around 90-cent level. So here's the 90-cent level. We generally hang around the 90-cent level, but we've been more bullish as of late. Looks like 2014 we started rallying up. I'm not sure what was happening in 2014, but been a little bit more bullish since then. The market's been doing pretty good, so it doesn't mind it being a little bit stronger. But you get too far, like up in this 120 area, and it's going to be kind of a danger zone for all kinds of stuff. Usually the dollar rises with inflationary thing. A couple things cause dollar to rise. I'm not a currency expert. I'm not going to pretend to be. But it does seem to like to be stable around the 95-cent level. Right around here, 96 cents. It likes it here. Comes back down. It's a bit of a pivot point, actually. Even going back there, we could move it down to here maybe. So that's 90 cents. So between 90 cents and a buck. In the 90-cent level, it likes to live there. So hopefully, 106 isn't too bad. Hopefully we can chill around here for a minute, maybe come down a little bit and hang out. But it doesn't need to be rising. That's not good for anybody, to be quite honest with you. A super strong dollar means that U.S. exports go down, which is bad for the U.S. It means that other countries can't really afford to do business in the dollar, which is bad for their economies, and it's just not a good thing. So we got to be stable around this 90-cent level. Euro did a really good job of popping up recently. Really nice. Look at that day right there. Massive volume of this particular exchange going up. We broke this downward sloping trend line, which has been in place since February, and we're hitting this pivot point. So this could be resistance here for the euro. Ideally, we stabilize out and maybe try to come back up. Been debating about whether I want to buy some euros or pounds. Pound down $1 is already up 18%. We'll see in a minute. That was down at parity with the U.S. dollar for a very short period of time. But we'll see. The pound's kind of been in this perpetual downtrend for decades now. But yeah, so the euro's in a better place. Definitely a better place. You can see here it gets really choppy. It doesn't trend as well as a lot of other things do. Except for an extreme circumstance. This one was an extreme circumstance. Again, 2014, I'm not sure what that was. Brexit? Was that Brexit? If that was Brexit, that was 8 years ago. That means I'm a very old man, and I can't be that old. I just can't be. I'll say that when I'm 80 too, so remind me how old I am when I'm 80. But this is a nice trend line for the euro. Great British pound back on its trend line, kind of holding a little bit here. And but yeah, so there it is, almost at parity with the US dollar. Got down to 103, already back up at 120 almost. So people took a big chunk of the pound right here. This formed a cup and handle pretty early right there, and then had a good day here. Monkey Tron was asking me about this day. That's a good bottoming day. And you see that acted as support. So there's definitely support for the pound here. The question is, when is it going to... it'll probably come back and retest. I mean, usually... But if you look at this one, this was March 2020. This came back, retested, has a similar look to it, and didn't really come back, so it doesn't have to. So if it does pull back at all, if you're looking to buy pounds, then I think you would be looking to buy sooner rather than later. I don't know if you'd wait too long. Why did USD break trend all of a sudden? I've got a theory, Green Lamp, and it's just a theory. And I will say events like this are predicated by macroeconomics, and which are due to change. So subject to change is my disclaimer on stuff like this. But I think we've peaked inflation. I think inflation has peaked. I've got a view on this whole inflation thing. I don't know if it's similar to other people's, but I haven't heard it in the mainstream. Not that I taken a lot of any media, right or left leaning, to be quite honest with you. But I think that inflation has peaked. I think it took a year, because here's what I think about inflation, right? So inflation, kind of, the Fed wants it to go up 2%. You know what? I'd be smart if I just used the line. The Fed wants it to go up 2% a year, like this, right? So we can box around here. So the Fed wants it to go up 2%. We bucked the trend and went up like 10% or something like that. I'm not sure if you guys can see these vertical lines here, but let's pretend those are years, okay? Okay, so... All right. So this is my thinking. I could be completely wrong. I'm not an economist, but I just use a lot of common sense. And common sense tells me that they use inflation with year-over-year numbers, right? So if you kind of have a 3-year cycle with this. And this part I'm thinking is new with the 3-year cycle. So you have inflation at 2%, and they're judging it month by month, right? So you could put 12 months in here, and whatever that. I'm just going to draw a bunch of lines. So we're getting all these reports. Everyone's paying really close attention to these stupid reports, which I hate because they come out like every month. You get all these reports, and we get all these things, and we're getting all these reports. Inflation's at 40-year highs, and it is. I mean, I'm not saying it's not, right? So we're getting all these reports. So this report relates to this one. This report relates to this one. This report relates to this one, if you see where I'm going with this. So all these reports are just relating to the prior year. And I think, and this is my hypothesis, I think that we're here. I think that for the past year, inflation's been reported like gangbusters, and it's due to all the money that Joe Biden printed. His last stimulus, though, the 4 trillion was, whatever it was, okay? So all the stimulus kept this 2% inflation kind of at about the right level. Trump did, and then Biden did one. Then Biden did the big one, which caused the actual inflation here, which caused all these monthly reports to come in, scaring the shit out of everyone. Now we're going sideways with inflation. I don't know if we're going to inflate much. We probably will inflate a little bit, barring some other type of calamitous event. And you're going to see inflation numbers bottom out, and it's going to take people a while to believe it, because we're led to believe, oh, inflation's up, but it is up, no doubt about that, but it's not, how do I put this? It's stalling. And I've been saying this for a while, especially during Power Hour, is we're going to reach a new normal, and here's your new normal right here. So this was our normal before, here's our new normal. We have to adjust to this new normal, and I think that is why in the DXY, maybe, now again, this is just a hypothesis of mine, the power, and this is not time related obviously, the powers that be that run these markets understand that inflation has peaked. Inflation has peaked. We've seen peak inflation. We're not going to see another 8% month because we did this for a year or however long it was. I don't know, 10 months, 14 months. I got no idea. We did this. Now we're flattening out. Now the inflation is essentially at the new normal. And so we don't need to be as bearish as we've been. You don't need the safe haven of the dollar. And so they're selling their dollars for more inflationary assets or something like that. That may be the wrong term, but they're selling those dollars now that they bought early on. So even if when it goes back to 2%, it really hasn't gone back. No, yeah, exactly. It will never go to 2. Well, it'll be 2%, but it'll be, so here, if here's our 2% clip, we're this. If that makes sense. We've achieved a new level of things. Just think of it like a flood. Like the flood comes in, but the waters don't really subside. It's just, we've just reached this new level, and then we'll go to, yeah, but at the new level. It's like another level. It means that what I think it means, here's my hypothesis, is that the institutions, because you and I don't cause this drop in the dollar. This is big money. Big money does this. And so they sold their dollars. They bought the euro because it was at a, almost record low. They bought the pound because it was at a record low, right? They sold the dollars. They bought these underrated currencies because they think inflation has peaked. And what I think is going to happen is they're going to start reevaluating the economy. And what it is these institutions have a different edge to the market that you and I have. You and I are retail traders. We look at charts or what, if you want to try to read a fucking economic report from Switzerland and try to trade the Swiss Kronos, whatever the hell it's called, yeah, go ahead, have fun. But you're not going to have an edge over the people that have 100-person teams analyzing all this shit. So I analyze charts because I follow what those people do. Oops, sorry, Amber. Just kicked my cat in the face. So from what I see happening is they've, repositioned themselves for the new normal to get back to normal. And so they're going to start seeing, okay, in the next 6 months to a year, what are the industries that are going to be able to take advantage of this environment? They're going to flow money into those because the people that trade currencies also trade equities, probably also trade cryptocurrencies and other assets. So it's not strictly just about the currency, although the currency market, obviously can give you, especially in this example, this is a fear run. This is fear and inflation, because in inflationary times, you will usually, because you can go back here on the monthly, and you go back to the 1970s with inflation, the market rallied, the currency rallied here as well. So there is fear of something, fear and inflation. I guess fear and inflation here a little bit, but this is just a big ass bull run. This could have just led by U.S. growth. Different things will lead markets to run, and this one's a fear run as well. I think this was Brexit. I think. When was Brexit? It was 2016, so it wasn't Brexit. I don't know what it was, but anyway. So they're going to start reallocating capital in different areas. That's what I think is going to happen. And see, here's the thing is, obviously this isn't living in a bubble. This is living in the real world. So they are going to, if inflation steps back up again for whatever reason, say another big bill passes and, Biden passes another $4 trillion, which probably caused this inflation, or at least exacerbated it beyond what it would have been, they can reevaluate and resell assets. So it's an ever-evolving story. Some people behave as some of these things are events, and in some cases they are, but what we're living through right now, each and every single one of us, is a living and breathing time in history. And so, we're trying to read this book in real time. It's difficult to do that, but we do seem to have broken this trend. And anyway, so that's what I think is happening. I think that macroeconomically, they think inflation is past. And so then you transition to the stock market and you say, okay, what are equities doing now? How are equities responding to the currency market maybe saying that we've peaked in inflation. So just think of that as the main indicator, is that, okay, the currencies say we've peaked with inflation. Well, how long does this peak last, and how long until we get back to more normal growth? That's where the stock market comes into play. Currencies tell you we've peaked and we're probably at a new level. We're probably at our new normal. And then the stock market's going to tell you, when are we going to get back to growth again? Because just like cryptos, and we talked about, winter going out, a year and 3 months, like we looked at it with Ethereum a short time ago. Now you're looking at that with the stock market. Okay, macroeconomically, how is this going to play out? Are we going to be stagnant with growth for the next year? Because here's the other thing that happens is during this inflationary period here, you're hearing all about layoffs right now. Facebook's cutting jobs, Carvana's cutting jobs, Twitter's cutting jobs. You're going to see cut jobs. So the economy, or the job market, as we hit this new normal, earnings are going to go down for a period of time. And there's going to be a normal with earnings, and earnings are going to have their new normal. And then we have to adjust to the new normal in earnings. So it may be a multi-cycle where you have a year of actual inflation, and the past, 3 months has been them scaring us about inflation, which happened the previous 9 months. But now people are going to be scared for the next 3 to 9 months. Earnings are going to be readjusted for the next 3 to 9 months. And then maybe if nothing else happens, we'll get back to this 2% inflation rate, and the market can get back to normal things in the best case scenario. So I see I'm losing people on the stream, but the people left try to pick this up, because this is how these economic cycles work. In a nutshell, that's been my experience, at least. And after reading things, and I read some Ray Dalio's stuff when he talks about market cycles, and Investors Business Daily when it comes to market cycles and recessions. Once you input all that data, it kind of works like this. See, and when it comes to the stock market, they have earnings. The stock market are driven by earnings. So when you go through an inflationary period, they don't really revise the earnings up as much as the inflation. So the earnings get inflated. So you're in this bull trend, and then inflation comes in, and that did start over here. Inflation comes in, and so they realize that earnings are going to be impacted, so they sell the stocks. They take all this profit, they sell it as fast as they can, which is why the drops are usually faster than the rises. And then they wait until all those earnings estimates that are put up by all these different financial institutions have to be revised for the, they have to get rid of all this stuff and move back to like all of this stuff. So that, they're looking at lower growth rates, and they project out forward, and they say, okay, we think it's going to do this. And then until they get it right, which is kind of weird, you're stuck with this malaise. This is a decent example of it right here, of them readjusting earnings reports, and then it gets back to growth, and then things are back to normal again. So it's kind of a triage effect when it comes to financial institutions. The market and the economy are roaring. Doesn't matter what happens, the market's going up. And then you have a contraction, a recession. Forget about the inflation stuff. You have a recession, earnings are revised, and then the government does something to kind of prop up the economy, and then that gives the markets confidence again. Then we start to rally once earnings are confirmed and things go back to normal. But this time what's different is we have this inflation, so it's throwing this into the mix. And so you have inflation, which reduces earnings, which causes layoffs. And then once those are done, earnings will flatten out, and then we'll start growing again once things are rebalancing. So it's a cycle, and it takes time. It takes time. And we may just be in the middle of it. We could take another year of this. I don't know. But anyway, I've been rambling for way too long on that one specific topic. But getting off of indexes over here into stocks now, going into the stock market, what I'm looking for is for what looks like good signs to me. Like, what are the leading stocks doing? What are the indexes doing? If we have peaked with inflation, we should see stability in the stock market, especially in the indexes, because certain stocks like Tesla are really being beaten down right now. No, even to go into why, it doesn't matter, but they're being beaten down. You've got Microsoft, which is at pretty low levels, but trying to find some support. Amazon being beaten down underneath the 100 level. So once these will stabilize out, all of these different thousands and hundreds of stocks will be reflected in the indexes. So you want to see stability in the indexes as Tesla goes down and Microsoft goes up and Apple goes down and Square goes up and Exxon goes up and Gold goes, or Blaze goes up and AMD goes up. And, once more start going up than go down, you'll start to see confidence step back into the market. So I'm looking for confidence right now, which I'm not quite seeing yet. I mean, we're holding up higher here on the Nasdaq, which I like this action. I like some of these high volume bottoms down here. See the volume aggregation tool showing the selling drifting away, now at parity with the buying pressure. And hopefully we'll be able to, hang out down here, find a new normal, and be all good. There's a couple of good-looking stocks like AMD. AMD is in the middle of a large growth phase for them. You can see the amount of green earnings boxes here. This one looks like a little worse for her. They missed revenue by 1% and earnings by 2%. Previous one was less margin. Previous to that was 24% and 17%, 21% and 6%. Oh, they're actually coming into their stride, AMD. And if you look at this and you look at this, you could go into a multi-year run. So this was, I don't know how long that was, 3 years for 1,500%. Could do something like that again, Maybe not quite as much percentage-wise. But I think we're getting to the point, if we peaked inflation, earnings will rebalance. I mean, if we're lucky, it'll only take a few quarters, maybe 2-3 quarters, for earnings to kind of rebalance themselves out. If the job market doesn't fall out, if all this stuff stabilizes out, this is a pretty bad inflationary event that we're going through. But I actually think that the Fed's doing a decent job. And I may get some flack for that because nobody loves the Fed. But, we're in a recession. Yeah, the market's down a bunch, but it's going to happen. So shut up about it because it's going to happen. It's not like... So here's the other flip side to that. Everyone's like, oh, we've been in the longest bull market of all time. And then everyone bitches about the Fed. And then everyone bitches about, interest rates, low interest rates. And everyone bitches. Everyone bitches about everything. When we go down, they bitch we go down. When we were up, they were bitching we were going up. So they're going to bitch the entire time. So just ignore the bitches and just pay attention to the charts because they're going to tell you, what's going to happen. You want to look for all of these big companies to shore themselves up because that, eventually every dollar goes into Apple. Eventually every dollar goes into Microsoft. Eventually every dollar goes into Amazon, right? So I think you have to pay attention to the leading stocks and the next batch of growth stocks. And I'm not sure which those are right now, but Investors Business Daily will tell me that. And that's it. So, right now the stocks aren't really that confident. You look at Amazon, which just has a tremendous amount of everything, and earnings stagnating at 120 billion. But you look at Amazon, you look at Microsoft, worse for wear. In a bull flag, though, that's technically a bull flag. You look at Apple, which has all the money in the world, and Apple's looking pretty decent, but it still has some time to go. So I think it's going to take some time for the markets to suss themselves out. But let's talk about for a minute after we're sussed out, after things are normal, and Apple does this, okay, and then maybe we pop up and we go up. The question is, here's the question. Do we go back into normal bull mode like we've been in the past 15 years? That is a question. Do we do that or do we not? And we go 1970 style stagflation, or at least in the markets. I should have this bookmarked. I don't think I do though. I'm just going to check because... Oh, that's not what I thought it was. Let's search for S&P real quick. Stay tuned. Oh, there we go. Okay, I don't have it. Actually, let's do Dow Jones. I got to bookmark one of these. Maybe it was the S&P that showed it. Oh, this doesn't look very good. Is that log? So, well, here's our HP market from 2000 to 2015. I think we finally broke out. Yeah, there it is. 2000 to 2015. on the Dow Jones, we finally broke out. That's the same for a lot of things. So that was 15 years of, so we went down, we came back up, then we went back down again. We could do that because we've gone up for long periods of time. The market typically goes up, comes down, goes up, comes down, goes up. But sometimes we chop. And even in very large percentages, such as 2000 to 2015. Also, you can see here we chopped around. This was kind of like war related, probably. I don't know. But there's a big choppy period right there. But you guys are making me go off on some nice tangents today. I think I know the debt is bad. I don't know the end result of it. It's probably our society collapsing into a ball of flames. But the Fed's done a decent job of keeping us afloat and keeping us growing and keeping it in the end result of that is lifestyles typically go up. If you can keep the economy going, then the economy can be efficient, they can make efficient products, and you can go to IKEA and buy a dresser for $17. I mean, that's what the stock market does for you. It allows for this type of innovation. So on one hand, the inflation is a double-edged sword and part of it's just the government sucks, but the government prints a shit ton of money, the Fed gives it to them, and have $30 trillion in debt that will never pay off. So we have to pay the piper at some point. So you either want to go back to paying the piper immediately, like one of our guys in our community, 50 Satoshi, which is the best name of all time, by the way, or you want it to continue like 98% of people. So you can't win either way, but at some point you'll pay the piper. I don't know when that's going to be, and China's the piper. So China will end up ruling the world. Anyway, but yeah, so if you look at the Dow Jones, the S&P in the 70s went flat, went sideways, range bound for a long period of time. All right, macro trends again here. Yeah, there it is. So 1960s and 70s. I guess this one went down too. It's the chart I remember. But yeah, choppy. So do we go choppy or do we go back up? So I don't know. Could it be because of recession and announcement fears? Well, yeah, probably. I mean, nobody likes recession. A lot of people think we're already in a recession. I'm not going to argue either way. It doesn't really matter. What matters is how the markets react to whatever's happening. So, and we just have to wait to see how that's really fully going to go. Again, like I said, the charts will tell you. The charts will tell you if the market's confident or not. People will throw different things at you. They'll throw the VIX at you. Oh, look at the VIX. Or they'll throw percentage at you, or they'll throw the term bear market at you. But you have to look at the whole thing. You have to look at the whole picture. We talked about currencies showing us that we potentially have peaked at inflation. Now we're looking to the stocks to see if they're stable. So if you peak inflation, the stocks are stable, then everyone's waiting for things to get good again. And then you're just waiting at the start line. At some point, that gun's going to go off, and boom, the market's off to the races. The question is it a 100-yard dash, or is it a marathon? And, we move on for a long period of time again. And like I said, I think the Fed's doing a decent job of managing what's happening right now. Obviously, they're not perfect by a long shot, but I do believe that the Federal Reserve's been around for, I don't know, since Bretton Woods, right? Where we got off the gold standard. I think the Fed's maybe, I don't know the Fed's history, but the Fed's been around for a while, and they learn from each economic cycle. So we've learned from 2018, we've learned from 2020, and we're going to learn here from 2022. But I think they're better able to keep things stable, which is why we're in this constant growth path since the year 2000. And yes, a lot of that is going to be really low interest rates, but it's kind of, I guess it is what it is. I don't know. We've had a lot of debates with a lot of people that think they know a lot of things, myself included. And, we just got to live in the world we live in. So, but anyway, so it's going to be what it's going to be. All we can do is try to make buy and sell decisions. The best thing you can do is get a house, pay it off, don't have any debt, so you can be secure in your household. That's the best thing you can do. That's it. Point blank and period. You don't need to make $1 billion in crypto. There's a statistic out there. If you make $90,000 a year, if you make more money, your life can't get any better, technically. So if you're making good money, or at least decent money, and stabilize your household. And then all these decisions become a lot less taxing, and they mean a lot less. I do right now. I'm working in the audio video business and service, and I meet some extraordinarily rich people. I mean, extraordinarily rich people. That's kind of the world that I'm living in day to day now, and you get to have good conversations with these people, and they just don't care because they have money. And I'll tell you right now, working in a $20 million house, $10 million house, not that much different from my house. The finishes are better. They have a maid come in and clean 3 times a week, but we both have houses. We both have refrigerators. We both have cars. Like, it's good to have, millions and millions of dollars, but it's not worth your day to day to try to risk it. It's just get yourself stable, get your personal finances in order, and then save additional money, and then try to get rich with that money. But get stable first, and then if you fail, it ain't so bad. All right, guys, I'm gonna end it right there. Let's wrap it up, and then I'm gonna bounce. Hold on a second. All right, so let's wrap it up. Redo my timestamp. All right, so let's wrap it up today. A good show, an accidental public show, but it was a good one. So thank you very much. Thank you, Loopy, for mentioning KAS to us. Thank you, everyone else, for participating. It's always great when we have some good chat. Yeah, so the markets right now, I mean, it feels like we're waiting for a drop in the cryptocurrency markets, is really what it feels like. So don't be too aggressive to the long side. If you want to be aggressive to the short side, try to find yourself a stop. And what I mean by that is if you wait for a pop in the market that goes to a prior high and fails, vis-a-vis this one, you can put your stop at your prior high, because let's say you waited for this pop and then it comes down, you put your stop at about 2%, and then you're good to go. You got a 2% stop loss. If you do that 3 and 4 and 5 times, it's not going to be detrimental to your account, and you very likely will make money if you're going with that bigger trend. So if you miss those pops, you got to wait for it to drop big and volume to step in, just like a breakout, but the inverse of a breakout. So here's an example: crossing our trend line, big volume. That's a time where you can step in. Other than that, here's a high that fails. So if you get your short in there, your stop could be there, 3 to 4%, basically 4%. But that's a bit of a higher probability because it's coming off of a big extended trend line break. But in these triangles, you can try to short them high or short them on the breakdown. It's pretty much a way to do it. But most things in this market have bear flags, and it does look like we're going to continue lower. It's just a matter of when. And we do have targets, and we'll see if we get there. So that's it. But it's the best advice I got, guys. Get your personal finances in order. Don't worry about getting rich. Worry about getting stable. Get a house. Get it paid off. And don't spend a lot of money on cars. Don't have any credit card debt. Get rid of all debt. I gotta tell you, it's really nice. I only have my house payment. I'll have that paid off in, I'm hoping, 4 years. And I will not have any debt. And then I will be investing like a mofo. And it'll be the best thing in the world, because I'll essentially have very little risk. So I'll save a bunch. I'll invest a bunch. And life is good. Life is a balance, everybody. So be balanced in your approach. All right, everyone. Have a great day. Stay safe out there. I guess I have to plug my show. So if you're interested in the Power Hour, you can go to real-crypto.com. You can sign up in the services section, and it'll walk you through what you get. We do a daily newsletter with a Saturday live stream. For this one was accidental. And you get the alerts for when the market's good. Again, alerts are really handy. We have the custom indicators like the volume aggregation tool, which is super handy. I really like the VA tool. We do have daily videos, but they're quick format. I forgot about that. I do daily videos. They're about 10 minutes, which I think some people appreciate more. Follow 3-day system. What else we got? I don't know. So join us if you'd like to. I appreciate it, guys. Have a great day. Stay safe out there. I'll see you next time.